you've got the market, which is down 15, 16 points. I mean, 10,719 is where we're at this point in time. Okay, we've got Girish Pai, who's head of research, Nirmal Institutional Equities. He's joining us right now. Girish, good morning. Thanks very much for your time. This question is only half in jest. What would a conversation between a sell-side broker who had active coverage on a stock where suddenly your auditor resigns, what conversation would a sell-side analyst or broker have with an institutional investor who owns the stock? How would the conversation go?
Well, if you're covering the stock, then you're in a very difficult spot. Fortunately, we don't have stocks of those sort under our coverage. So we don't have those kind of conversations with the buy side as we speak. Yes, I mean, obviously that area of the market has kind of seen a lot more action. A lot of auditors resigning from certain companies which have been questioned by some of the analysts in the market, not necessarily the sell side analysts, but others in the market have questioned corporate governance in certain mid-cap companies. I think this happens in every bull market. You know, when the tide turns, when the amount of liquidity in the market kind of goes down a tad. My sense is that these kind of awkward situations do crop up. Okay.
Girish, I'm sure a lot of your clients must be asking you that are we still in a bull market when it comes to the mid-caps? What kind of recommendations do you have right now?
Right, so we are largely a mid-cap focused brokerage. So what we generally track under our coverage in the mid-cap space are quality structural compounding stories on the corporate side. So we have a preponderance of consumption-oriented plays which have got revenue and earnings compounding visibility over the next 5, 10, 15-year time frame. And corporate governance is fairly high, and return ratios are fairly good. It's not that these companies require a lot of capital to grow. So those are the kind of stocks that we've been pushing. So be it consumer discretionary, which could involve auto names, it could be staple names, which could be large cap and mid cap. It could be consumer durable / appliance stories. It could also be companies on the media side, which are consumer discretionary in nature, say a film exhibition company. So consumption as a theme has been one of the areas that we focused on as a brokerage, and that has been the key talking point when we go and meet the buy side.
Okay. Girish, wanted your thoughts in terms of the auto stocks also. For example, Bajaj Auto, very good numbers this time for the month of May, even something like Maruti and Ashok Leyland. What are your top picks within the entire auto space?
Yeah, so auto is a space that we've liked for a fair bit of time because we've seen high single-digit to low double-digit kind of low teen kind of growth coming through across various segments of the market. Some companies have been growing a little faster than the rest. So within the two-wheeler space, we currently like Eicher Motors among the large cap companies, and even Hero Motors. Eicher, the story is that we think that the 6% odd market share that it's got within the motorcycle segment of the market, we think that should go up as aspirational levels of the Indian population keep increasing. So there's a base of about 70 to 80 million bikes in the country, which are typically, the entry-level bikes, which are probably priced at 40 to 50,000. We think that from moving upwards to a car becomes a little bit difficult with the kind of per capita incomes we have. We feel that the immediate move would be more towards a 150,000 kind of a bike, which is maybe a premium bike. So we believe that there could be a demand coming from the owners of the existing 70, 80 million bikes, which are entry or executive level bikes. And there is definitely a penetration related play out there. We think that the market share that Eicher has got in certain northern states is very low right now, whereas almost 1 in 3 bikes in prosperous states like Kerala or Goa or Punjab, their market share is fairly high. So we think that as the incomes go up, that's a company which is going to benefit quite a lot. We like Maruti on an absolute basis, but between Maruti and iShares, we think that volume growth of iShares is going to be probably superior over the next 5-year time frame, and the valuation multiple differential between the two is not very large. So between, while we like both, we think that iShares is probably a better stock to own over the next 5-year time frame. The other stocks we like include Ashok Leyland. We think that there is a story on the BS6 norms which are going to come up. There could be pre-buying of that in FY20, which is going to drive growth. So it's probably among the few companies where we're probably going to see FY20 growth faster than FY19 based on my analysts' estimates. So that's a stock that we kind of like within the CV space. Broadly, these are the kind of stocks we like within the auto pack.
All right. Just one last question. Thanks for those picks, and I think hope they're useful for our viewers. This entire political situation, I mean, you pick up any newspaper today, I mean, it's all politics and politics, right? I mean, the market seems to be oblivious to what's going on. Is the reaction going to come at some point, or, I mean, it's basically priced in?
See, I think it depends on what kind of what reaction you see from the government side to the successive by-election losses that one has seen in UP and some of the other parts of the country. So if you do see a situation where, say, MSP increases are fairly substantial, I think that's probably going to come through in the next couple of months for the Kharif crops. If the increases are pretty substantial, and if there is a situation where the government either takes on its books or forces some of the OMCs or the upstream companies to take losses for higher crude oil prices, that would mean that the government has become sensitive to public opinion and is probably trying to be a bit populist. So if once that happens, I would start getting worried. But we've seen setbacks for this government over the last few years in terms of elections. So we had Bihar elections which didn't go the BJP's way. There will be reactions for a couple of days, but then the market recovers and then it reacts more to global developments and macro factors and earnings and stuff like that. So in the immediate term, I would worry about the MSP increase and potential impact on OMCs and upstream companies of under recoveries, or if the increases are not passed on to customers from here on. Obviously, we need to worry about inflation also with the higher petrol product prices, the second round effects of that. So politics, yes, it will be a worry. My sense is that from here on till the next election result comes out, that could be a big factor which could be capping the upside of the market beyond the 11,200 level. So my sense is the market is going to trade in the 10,000 to 11,200 kind of range for probably next 12 months or so.
Okay, all right, Girish, we're going to leave it on that note. Thanks very much for joining in and talking to us. So that's the view coming in from Nirmal Bang. Some news with regards to Flipkart.